support. Of course, this being a spousal support calculator, this is the main section. And the nice thing from a data entry standpoint is that there's no data entry required in this section. All the calculations are performed on the basis of what you've done already in sections 1 through 4. And that's why I refer to the forms in this section as reports rather than worksheets. Of the 4 available reports, the first, income, taxes, support, and expenses, may be the most informative. It's a descriptive name, but it's kind of long, so when we refer to it here at Puritas Springs, we usually call it the ITSE form. When it comes to an analysis of a particular spousal support amount, this is where you want to start. It summarizes the party's income, the taxes, support, and expenses based on the amount of spousal support, which is shown here at the top where my mouse is on the Set Spousal Support button. Calling your attention to that button, you probably noticed during this video that as you started, or as I started the file, and you enter the husband's income, that the spousal support will be calculated at a certain amount. Then as you enter more financial information, the wife's income information, for example, the amount will change. The spousal support amount will get smaller, of course, as you decrease the difference between the husband and the wife's incomes. Right now, the button reads H to W, that would be husband pays to wife, $19,047. It's that amount that is, and the tax consequences of that amount that are summarized on the ITSE form. And I guess if I was going to walk into court with only one paper, that's the one I'd consider taking because it's got the summary of everything. I'll click on the ITSE item so you can take a look at the report. If you're interested strictly in income equalization, the line to take a look at is total taxable and non-taxable income adjusted for taxes and payment of spousal and child support. Yeah, that's what it says. That's what it is. On that line, you see $47,794 in the husband's column and $46,851 in the wife's. Now, you might look at these two figures and wonder why they're not equal. After all, this is income equalization we're talking about. And the answer to that observation is that when you factor in the tax calculation, it's practically impossible to get an exact balance due to incremental changes in things like the tax tables and such. Consequently, it's unlikely that these two amounts are ever going to be exact to the penny equal, but they'll be relatively close. You might consider the last part of the ITSE report to be the standard of living section. It gives you a breakdown of the parties' expenses and, compared to their respective incomes, also of the parties' abilities to meet those expenses, both essential and non-essential. In the report that you see on your screen right now, we have total taxable income for the husband at $70,916. That is his other taxable income, which consisted of small amounts of interest and state tax refunds, along with his Schedule E income. For the wife, total taxable income is $49,548. That came from the wife's 2 part-time employments, totaling about $30,000, and the receipt of spousal support, which is taxable, in the amount of $19,047. The next item is an adjustment to total income resulting from spousal support paid, and that's the $19,000 amount in the husband's column. The next section of the ITSE form breaks down the taxes based on the income and adjustments that we've just looked at. It shows that the husband's total tax liability is $2,000 and $2,081, and the wife's is $9,201. Why the huge difference? Well, there's 2 main reasons. One is that the husband's S-Corp income is not subject to Social Security / Medicare withholding. That, in and of itself, accounts for a $2,333 difference between the husband and wife. Second, the payment of alimony in the amount of almost $20,000 gives the husband a very substantial adjustment to income, whereas on the other hand, the receipt of that amount results in a substantial increase to the wife's tax liability. By looking at the percentage figures below that line, we see that their resulting incomes adjusted for taxes and the payment of spousal and child support is nearly equal, less than 1% difference when compared to their combined incomes. That's the income equalization line. Now the next section below that deals with personal living expenses. The husband's total $40,000 and the wife's about $28,000. The reason for the discrepancy here is that the husband agreed to stay in the marital residence while the wife moved to more modest accommodations. If we were to look back at the husband's personal living expense worksheet, we'd see that the marital residence must be in some type of luxury community because his real estate taxes alone were about $15,000 a year. Furthermore, because he has no employment-provided health benefit, he's paying $8,400 annually for health insurance. Those two items alone account for the lion's share of his personal living expenses. Now the last section of the ITSE form compares the parties' non-essential living expenses, where we see, again, that the parties are nearly equal. The way 3105 was written, the overriding principle governing a court's award of spousal support is that the award must be reasonable. Subsection B of that section provides that upon the request of either party after the division of property, the court may award reasonable spousal support. The following subsection C that we've been looking at throughout this video provides that in determining whether spousal support is appropriate and reasonable, the court shall consider the following factors, and we get the list of 14 factors. So the factors aren't there in and of themselves. They're there to make a determination as to whether spousal support is reasonable. Now, one of the arguments that is made with respect to the issue of reasonableness is that the spousal support obligor is, due to the payment of spousal support, unable to meet their necessary living expenses, and that's where the ITSE report's last few lines come into play. I'm referring specifically to the two income/deficit after taxes and expenses lines. If those numbers are positive, as they are here, it means that the parties have enough money to meet their expenses. If the numbers are negative, it means they do not, and that's a flag indicating that you need to carefully examine the expenses you've entered and to be familiar with the cases that we've covered on that subject so that you can try to fit your case into that framework. It's important to keep an eye on these amounts because I've never made a statistical study of the issue, but I'd be willing to bet that more often than not, these amounts end up being negative numbers. There's probably two main reasons for that. Number one, the financial realities of taking the same amount of combined income that supported one family unit and now trying to support two with its commensurate doubling of lodging and every other living expense that you can think of. And two, the fact that money problems frequently play a part in stressing out the marital relationship to the point of divorce or dissolution. When these numbers are negative, you've got at least some ammunition supporting the notion that the spousal support order is not reasonable and appropriate, especially if the parties were not living beyond their means or the obligor party was not primarily responsible for incurring excessive marital debt. We've covered one or two cases on this point already, and there are more that we haven't covered that are mini-briefed in the downloadable materials. Just to summarize, these amounts that we're talking about mean, in plain English, that after the exchange of spousal support and the payment of necessary living expenses, the husband has $7,234 left over, and the wife has $18,771. In the last pair of numbers, they show us that after the exchange of spousal support and the payment of necessary and luxury or non-essential expenses, the husband still has $5,818 of income left, and the wife has $17,451. That tells us that, in the least, neither of the parties should be suffering hardship as a result of this spousal support order of $19,047. At this point, I'm going to use the Close Active Window button to go back to the main window, and I'm going to click on the Support versus Lifestyle report. When you first look at this report, you're likely to recoil and wonder, hey, what the heck is this? It may look like a mind-boggling form, but once you understand how it's made up, it becomes a lot easier to make sense of the information that it presents. The key to understanding this form is to think of it as a summary of 28 different ITSE forms on one sheet of paper. Each husband-wife division line represents a summary of one ITSE form at a particular level of spousal support. So the first husband-wife division is a summary of ITSE with no spousal support. With no spousal support, we see that after taxes, the husband has a total income of $66,790, and the wife has $24,911. After the payment of child support, these amounts become $58,558 for the husband and $33,143 for the wife. The next column shows the parties' respective incomes after payment of essential living expenses. The husband's remaining income is $17,998, and the wife's is $5,063. As far as the percentages are concerned, what you're looking for is the point at which the percentage dips below 100%, because that means that a party's income is insufficient to meet their expenses. The last two columns duplicate the same information, comparing essential and non-essential living expenses. One thing about it is that you can't really see how the percentages are calculated because they represent the ratio of income to expenses, and those expenses that they're factoring in aren't listed on the lifestyle form. So you really only see the end result, the percentage, and you don't really see the data that was used to calculate the percentage. As I pointed out, the important rows in this table are around 100%. Below 100%, a party is not able to meet their expenses, and conversely, above 100%, spousal support payments are now sufficient to meet a party, to allow a party to meet their expenses. In our example, we have probably what is an atypical situation where there is enough money at almost all levels for the parties to meet their expenses. Although you can see that by the time the level of spousal support would reach $24,489, the husband is just going below 100%. And if spousal support goes above that, well, you can guess where that scenario ends up. When the lifestyle report is calculated, MA tries to present a range of spousal support orders that places the point of income equalization somewhere near the middle of the chart. Consequently, you've got some support levels both above and below the point of income equalization. As I pointed out a moment ago, the level of spousal support is shown in the first column. It starts at 0 spousal support and moves up incrementally through its arbitrary range. You see it in the case of our example that the next level of spousal support analyzed is $907. The next is $1,814. The next is $2,721, and so on. As I said, the important points are where the ratios move above or below 100%, apart from the point of equalization, that is. You should also note that each of these points is highlighted in red, so they're easier to spot when you're looking at the table. Based on what I said about the lifestyle form, there can be about 5 spousal support levels that may be interesting to take a look at. The first is the level of spousal support at which income equalization occurs. That's the red area here where I have my cursor. The next important level is the point at which the obligor is unable to meet his or her essential living expenses. That never happens in this scenario. By the time we get to the bottom of the table at $24,489, the husband's percentage is at 102%. So the husband is just able to meet his expenses at this level, and probably if we kicked it up one more notch, it would be less than 100%, indicating that the husband no longer would be able to meet his essential living expenses. The next level of interest would be where the obligee, the spousal support recipient, is not able to meet his or her essential living expenses. That also would be in red, but it never occurs in the range of support amounts on this table that we're looking at. Other potential levels of interest would be points at which the party is unable to meet essential and non-essential living expenses. As I mentioned a moment ago, that point is reached on the last line of the table where the husband's percentage dips below 100%. Another point of interest is where a party is able to meet their expenses. This would encompass situations where the lifestyle report starts at the very first level below 100%. In that scenario, the point of interest occurs when the percentage finally goes or hits 100% or goes above 100%. So it's actually the opposite of what we had before, where we were interested in the point where the percentage started above 100% but eventually went below it. The bottom line, it's at least in part about which direction you're starting from when you approach 100%. Enough said about the lifestyle form. I'm going to use the Close Active Window button to jump back to the main window and show briefly the third item in that section, Statutory Considerations. This report is a multi-page report that varies somewhat in length depending on the fact situation. Where the ITSE and lifestyle reports are in a tabular form, this report is styled more like a legal brief. For that reason, some of you may find it easier to understand than the tables. In addition, it has some unique information that you don't find anywhere else in MA, and I'll be going over that in a moment. Basically, the Statutory Considerations Report is a factor-by-factor breakdown of the considerations listed in 3105.18c. This report starts with Factor A and goes right through to Factor N. One by one, the factors are reviewed based on the information that you entered in the earlier steps of the main window. Aside from the review, there are blank lines in each section for you to add your notes in case you wanted to take the report with you to use in court, for example, to make oral argument or something like that. There are also relevant case citations along the way. I'll bring one into view here so you can see it. For example, in the context of earning ability, there's a quote from Hanninger versus Hanninger. And on the issue of duration of marriage, you'll find case cites to Kunkel versus Kunkel, which we've already mentioned, and Woodrum versus Woodrum, which are on page 3 of the report here. Now, I'm not going to go over those cases now, and like I said, Kunkel I've already referred to. But they are available among the downloadable materials, either as part of the sample MAB file printout, or the MAB file itself, or the survey of case law that I've been referring to throughout. There's also something I'd like to show you on page 5. It's a comparison based on the county of residence, showing the most recent U.S. Bureau of Economic Analysis's figures related to per capita income in every county in Ohio. It compares the parties' total income to their county's per capita income. For example, in our sample case, which uses the county of residence as Medina, we see that the county per capita income is $31,494, and that the husband's total income is $52,715. This is a ratio of 1.67 to 1. It kind of gives you an idea of how your parties compare to average families in the county of residence, and it has some bearing on standard of living, although recall that the statute talks about the standard of living the parties themselves established during the marriage, and not in comparison to Joe and Mary average in that county. There are 14 factors in 3105.18c, and the Statutory Considerations Report is 8 pages long, and as usual, we don't have time to go through this report in detail. Again, the downloadable materials will let you do that on your own if you are so disposed. With that, I'm going to return to the main window and show you the last item. It's the Set Spousal Support form. Click on that item or use the button on the button bar, and you'll see that this report has a brief discussion of the law, but more importantly, it has a few fields where you can set the amount of spousal support and set the obligor. This can be useful where the parties have come to an agreement on the amount of spousal support, and you want to make sure that the amount is equitable in terms of tax consequences and the parties' ability to meet their expenses. The set spousal support function permits you to override, that is, manually set, the spousal support amount that is going to be used by MA. I can demonstrate that by changing the spousal support amount in our example to $12,000. There are a few ways to override. I may have mentioned them already. One is the options menu. Another is using the accelerator keys Control E. And another is double-clicking in the aqua-colored text input box. Now, regardless which method you use, the result is that you, instead of MA, fix the amount of spousal support. When you override a field, the text appears in red as a reminder that it's your own value, not MA's. Now, using the $12,000 spousal support amount, we can flip back and take a look at the ITSE report to see what the consequences are. It's very nice and extremely handy for evaluating proposals. That's the MO right there. Set the spousal support amount and then check out the ITSE report to see what happened. For purposes of evaluating our $12,000 spousal support amount, I'll return to the main window and bring up the ITSE form. If we scroll down on the ITSE form, we see that even at $12,000, the parties can still meet their living expenses quite handily. Notice that the income equalization has shifted a bit from 56% for the husband to 43% for the wife, but both parties are able to meet not only their essential living expenses, but also their non-essential living expenses as well. In designing MA, we thought setting spousal support was important enough to warrant placing a button on the toolbar so that you can get to it quickly and easily. I'll use the button now to return to the Set Spousal Support page, and I'm going to cancel the override. Now, when I do that, you'll notice that the spousal support amount changes. However, you're probably noticing that it didn't return to what it was, which was $19,047. I can press the Update button here on the toolbar to make that happen, but I'll explain why that happened in the final section of this video. For now, however, I want to move on to the next section, which is property and debts.